Hey everyone, and thanks for jumping back into the Cryptoverse. Today we're going to talk about Bitcoin. We're going to be looking at the close again that we had above the 20-week moving average. So 2 weeks of support at the 20-week moving average. If you guys like the content, please go ahead and subscribe to the channel. Give the video a thumbs up. Please also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, you guys know the drill here, right? We've been talking about Bitcoin for a while. It's currently at 10,681, so 10,682. We've been talking about this testing the 20-week moving average, right? This has been our key test. We failed to hold it back, a year ago, back in September of 2019. You can see we failed to hold it as support. And then 6 months later in March, we failed again, right? And one of the things you notice is that first candle, or the wick, the first candle slash wick that tested the 20-week for back in September, it was the very next candle that broke through. Again, over here in March of 2020, we had this candle. Well, this was the end of February, and then we broke through it early March. So a couple similarities there, right? We came back to the 20-week, instantly fell below, came back to the 20-week, instantly fell below. And then if you go to present day, you can see that we had a candle. It came down to the 20-week, right? The August 31st candle. Instead of falling below like we did the last two times, we actually, the next candle held it as support, right? You can see we even had a wick that went slightly below it, but remember the wicks aren't that meaningful. It's looking at the body of the candles. And now we are headed, it looks like at least in the short term, we've headed back up. We're heading back up a little bit, so maybe we bounced back off of it. Now we want to talk about a couple things here. So if you go back and you look at the last cycle, as we've showed many times, we also had that a similar type thing, right? We had that 20% drop, so we had a 20% drop down to the 20-week. We hovered around the 20-week for a couple weeks, and then we bounced back up close to the local top, right? So the local top here, if we just go to say the candle tops, which is approximately here, it was around $450, okay? And then at the bottom, if we just compare it to the bottom, it's around here, so approximately $370, $368, something like that. So we had a similar move, right? We came to the top and we came back down to the bottom, right? Which was our prior local top. Okay, so local top, back down, break through to the top of the new reaccumulation range, back down to the prior. This is back down to the prior local top, right? So we held support on what before was our local top, which also happened to correspond to holding the 20-week moving average as support, right? So we held the 20-week moving average as support, which also happened to correspond to our prior local top. We then went back up to the top of that range, then back down to the 20-week, right? But note that the 20-week had increased, right? So from the bottom down here, the 20-week had increased approximately 8% or so since when we tested it the first time to when we tested it again. We then came back up to the local top, right? So this is three of them. So we had 1, 2, 3, right? And then we moved sideways into the 20-week moving average. Once we got to the 20-week, then we broke through. Okay, so we're not saying that we have to repeat it, right? We know that it does not have to repeat. But I'm just trying to give you guys an idea, right, of what happened last time so that you can prepare for what may happen this time. And again, we don't know that it would repeat, but it's just some type of speculation that we can say, well, you know what? We have seen this type of pattern before. If it continues to play out, this is, commensurate with the last cycle, then this is what would happen. So keep this in mind, right? So local, our prior local top, our resistance region that we were trying to break through. Also note, again, that this range here, once we broke through it, lasted approximately 26 weeks. Okay, 26 weeks. Okay, so now let's go to present day. All right, so what did we have? Similar type thing, okay? We moved to the top of the range, right? Moved to the top of the range, and then we came down. But where did we come back down to? Well, we came back to the local top, the prior local top, right? If we extend this out, this was our prior local top, similar to the last cycle, right? And another similarity too is that this local top also corresponds, just like the last cycle, to the 20-week moving average, right? So it's doing something similar, right? So it came up, And I guess we can go ahead and get rid of this because this ultimately was not our reaccumulation region. I mean, we'll leave it in there, but ultimately speaking, Bitcoin did decide to test the 20-week now, which we've always said is a possibility. Remember, if you are exposed into crypto and a move to the 20-week would be too much for you, then, just I would say think a little bit about your resolve there, because even during a bull market, we test the 20-week moving average several times, right? We test it several times, several 20 to 30 to 40% drops down to the 20-week moving average. This is business as usual. So first move up, back down to our prior local top. Now we've started to move back up. Now, if we continue to repeat, right, if this is going to repeat, as we said in the live stream yesterday when we were back at 10.3, if we continue to repeat, right, then what would happen is we would slowly go back up to 12K. The 20-week moving average would continue to increase. Maybe we would come back down to test the 20-week, then back up, and then we would move sideways until the 20-week meets us, and then we break through. Okay, this would be if there's like kind of like a replica of the last cycle. But we know that it doesn't always necessarily need to be an exact replica of the last cycle. One of the things we've also spoken about, though, which you can see it playing out, right, is one of the things we've said, right, is the price cannot just go sideways. So the price of Bitcoin, it cannot just go sideways and expect to stay above the 20-week, right? So imagine if we had just started going sideways over here. Well, the 20-week is going to come above it at some point, right? Which would lead us to having a weekly close below the 20-week moving average, right? If you have that, as we've said before, right, it's not good. It's the bad news bears in the short term. If we take a look at the moving averages, let's put on the 100-week moving average. So the break last time, or a year ago, we immediately had a candle down to the 100-week. And then 6 months ago, we immediately had a candle down to the 200-week with a wick down to the 300-week. So it's not showing on here because we don't have enough price data. But if we look at it on here, you can see it. So this is the BLX, so a wick all the way down to the 300-week. So it's generally not good when Bitcoin breaks the 20-week moving average. We recognize this, right? This is business as usual. We know that if it breaks the 20-week, it's not good. But at the same time, if it holds it, right, then the market can gear right back up, right? And it's almost like you never even missed a beat. It's just business as usual, and it's smooth sailing again. So the question, right, is, are we going to continue to stay above the 20-week? Well, what we said we needed to do is so far what Bitcoin has been doing, right? Bitcoin, the price of Bitcoin needs to slowly trend upwards for the price to stay above the 20-week, right? So the 20-week a couple weeks ago was around 9,800. Last week it was around 9,940, 9,950. This week you can see the 20-week moving average is at over $10,000. So the 20-week moving average is over $10,000 now, right? So for the price of Bitcoin to close above the 20-week moving average week upon week, it needs to be closing above 10K, right? Because if it's not, then it's closing below the 20-week moving average, at least in the short term. Okay, one of the things we've also spoken about too in looking at these patterns, and again, it could be an exponential increase, maybe not linear, but let's just suppose it's linear. If you look back at the first cycle, as we've mentioned many times, it was the first break of the 20-week ultimately led us to holding it as support. I'm more or less, right? I mean, the candles are all around the 20-week, holding it as support, right? We didn't continue to go on and go into this really long accumulation mode, right? Which would look something like this, where the price continues to, oscillate around the 20-week, something like that, okay? So we had one test before the bull market. The second cycle, we had two tests, right? Because the first test here failed, right? And once we broke through the 20-week, right? You can see it right here. We broke through it. We came immediately down to the 200-week, right? So we've seen this before. Break the 20-week, come down to the 200-week, okay? So, but then it was the second test, right? We held a support, and once we held it as support, we went parabolic. And then third cycle, and by the way, this is really the fourth cycle, but it's the third cycle after a bear market that gets us to that accumulation phase. So this one you can see we failed it here, or sorry, we tried it, we broke through it here, but failed. Broke through it here, but failed. And then broke through it here, and have not failed yet. It doesn't mean we won't fail, right? Just because Just because the price is now at 10.7 doesn't mean that it can't fail. It's always possible that we kick the can down the road. We still have time. I mean, as I've said before, I don't think we're going to get to a sustainable $20,000 Bitcoin for probably at least till the end of 2021, early 2022. Doesn't mean that, it doesn't mean that we can't trend up, maybe go up to 20K, kind of like have like a short-term bubble, come back down, something like that. It's always on the cards. So always be prepared for that, right? We know that bubbles form in crypto. We also know that Bitcoin crashes, right? It's just what you do. It's how you react to these things. It's like, how do you react to the bubbles? How do you react to these crashes? Are you the smart money buying in when it crashes and the smart money selling during bubbles, or are you the dumb money selling during crashes and FOMOing in during bubbles? So whatever you are, figure out what it is, and if you're on the wrong side of that, figure out how you can correct it, right? Because you need to get a better handle on the markets. You don't want to be that person capitulating when it's, when Bitcoin is down like 70-80% or something. This is not, generally speaking, or at least historically speaking, this would not have worked out well for you, right? And FOMOing in during a bubble like the last one, maybe you get in here and you sell here and you get lucky, but again, this is gambling, right? I mean, what you want to do, this is not financial advice, right? But you want to get in when we're in this regression band, right? And we look at it, you look at the macro view of it, it's relatively straightforward, right? I mean, you want to get in when we're in these non-bubble phases, right? So down here, right here, these were, these moves preceded these parabolic moves, right? This was another one right here, and then we expect this one to look something like this, right? So getting in before we make that price discovery mode to the top of the regression band before ultimately coming back down and moving back to our fair value regression band. So this is the goal. It doesn't need to be more complicated than it is, right? This is fairly straightforward, I think. So what we're going to look for now is, this is, so far we've had a nice little bounce, right? We've come down, we came back down to our local top, right? Which, as we kind of said before, you get like 2 steps forward sometimes, and then maybe 1 step back, and then maybe 2 steps forward, right? This is the idea during a bull market, of course. So you can see we've had the move down to the 20-week, which was the final thing that we needed to at least say, can the bull market start, right? The 3 things being the golden cross, which we had that, right? If you want to see the golden cross, let me quickly put it up for you. So this, let me hide these. So we'll just look at the 50-day and the 200-day. So, and similarly, right? Similarly with the golden cross, there was, there are some similarities with last cycles as well, just in the way there was with the 20-week. Okay. So let me just remind you before we get to this, if you guys like the content and you want to access the premium content, check out into the Cryptoversecom. We have weekly premium reports, weekly premium videos. If you sign up, you get access to all the historical reports. I think they do well at standing the test of time, so you can go back and look at those, and I think they're really helpful. You get access to the private Telegram alerts channel, the private Telegram chat room, the risk dashboard, which is what I use to swing trade these momentum shifts in the market, right? We have a lot of different coins: Bitcoin, Ethereum, Chainlink, Cardano, Monero, Litecoin, XRP. We're going to be adding more. We just added Tezos. So if you guys like that, check it out. And then also you get access to a dynamic DCA strategy dashboard where you can check, project how various selling strategies would occur or how they would play out, theoretically speaking, with somewhat dubious projections based on what you think the top of, say, Bitcoin or Ethereum will reach this cycle. So it kind of shows you, if you're too aggressive, if you wait and wait and wait to sell anything, it shows you what you might leave on the table if there's a crash. So then you can kind of come up with a more moderate approach, right? So you sell some on the way up, recognizing that you want it to go higher, but you also recognize that there's always that downside risk, right? This was, if you follow the channel, we talked about this, right? The Ethereum risk. Yeah, this was a textbook example for Chainlink, because Chainlink went through a bubble. We took profits, got out. Now it's looking to get back in at some point. Same thing with Ethereum. We got to the 0.6 risk level, for against Ethereum Bitcoin. So then it was just taking profits, moving back. Business as usual, right? The Ethereum USD risk band got to 0.5. So it was just setting the stop loss at those levels, taking the profits. It drops back down. You DCA back into the market. Obviously, take care of your tax situation if you do that. But this is just it's more of a data science approach to the markets rather than your traditional TA. So check it out. Remember, the prices are going up in 14 days. Okay, so in 2 weeks, the prices are going up. If you want to get grandfathered in before they go up, make sure you sign up before then, because they're going to go up, and they're going to go up fairly significantly. It's not just going to be like a 10% increase. They're going to go up fairly significantly. So make sure you get in before that if you want to be grandfathered in and you want access to this content for the duration of the market cycle. One of the things I've said before, right, is I publish a lot of the free stuff to YouTube, right? I mean, I do daily YouTube videos, but over time, I'm going to do less and less public stuff, right, and more premium stuff, right? So 2019 and 2020 are mainly my expansion phase of the YouTube channel, just so people can see the content, see kind of what value you get out of it. As we move forward, the public content will decrease and the premium content will increase. And you can also pay with crypto for like 12 months and get a 15% discount. So check it out if you guys want access to the premium content. So in the same manner, right, as the 20 week, if you look at the golden crosses, right, you see a similar story. In the first cycle, we had one golden cross, right, before the parabolic move, and you can see that we did not have another death cross until the party was over, right? So until the party was over, it was this basically moved it right here that saved us. It got us back above the 20 week. We did not print the death cross, and then we moved up one last time. Second cycle, we had two golden crosses, right? So first golden cross, death cross, golden cross. So second one led us off to the parabolic move. Third cycle, one golden cross, death cross, golden cross, death cross, and then our third golden cross. And remember, these crosses occur just with natural volatility, right? If Bitcoin's in a longer accumulation mode, then there's going to be more of these crosses just because of natural volatility. So this is yet another example to show that lengthening cycles are a thing, right? Because we can see we're spending more time in these reaccumulation phases, right? There's a lot of volatility to the upside and the downside, and we're just continuing to print these crosses. So it's currently September of 2020. I think that it's most likely it's just going to be a slow grind, right, back to 20K. A slow grind back to 20K. We're going to have corrections along the way, but we're prepared for this, right? And you can see the general moves. If we put back on the regression band, of course, there's these parabolic move, the bear market, the slow move back to the prior all-time high, and then you rinse and repeat for each cycle. And then this is where we currently are. So I think it's still a slow grind to 20K. What's a few K among friends in terms of volatility between now and then, whether we go down to 8,000 or we go up to 12,000. I don't think it makes a huge deal in terms of where Bitcoin is going over the next few years. Ultimately, I think it is, it will slowly trend up. And then once we get to this point, I think we'll then go into parabolic price discovery mode, right? And maybe peak sometime out in summer of 2023 or something. So something like that. And we're prepared every step of the way, right? We're ready for it. We recognize that even in bull markets, as we've noted, even in bull markets, we're going to see moves down to the 20-week moving average, right? 20% moves, sometimes 30% moves, sometimes 40% moves, right? But these are par for the course, even in a bull market. So I would say that this has been our first test of this current cycle, right? And it was approximately a 20% move down to the 20-week. If we hold it, right? I mean, it's hard to know if we're going to hold it, right? Hindsight will elucidate the truth when we look back on this in a couple of years and see what happened. But at the present time, it's looking a lot stronger, right, than it did the last two times, right? I mean, you can say that at the very least, because the last two times, essentially once we got to the 20-week, we immediately fell through. Get to the 20-week, immediately fall through. Here, we have just printed we're in our third weekly candle. So we're in our third weekly candle above the 20-week. So we'll see if that continues to trend up. Remember, it needs to trend up for us to stay above the 20-week. So currently, at the current time, we are approximately 6 or 7% above the 20-week. Okay, so we have some wiggle room there. We could easily drop down and continue to test it. But at least the bulls are putting up a better fight this time. I mean, you can see last time there wasn't really much of a fight put up at all back in February and March of 2020. So Let me know what you guys think. Make sure you subscribe to the channel. Trying to get to 40,000 subscribers by the end of the year. So I still have about I still need to get about 4,000 subscribers in that period of time. Make sure you turn on your notifications. Give the video a thumbs up. Remember to check out the Telegram channel and the premium list if you want access to that. You can find links to those in the description below. And I will see you guys next time. Bye.